Hello and welcome to our pilot episode of the SwingTrader Status Update. My name is Justin Nielsen. I'm going to be your host today, and joining me, as he will every, roughly week or so, it's going to be Mike Webster, our senior market strategist who just recently joined Investors Business Daily again for the second time. So for those of you that were with us before, you know that during 2020, we had a really phenomenal time with Mike and SwingTrader, a lot of activity after that COVID crash and the gunning market that we had back then. He took a little break, did some soul searching, and just loved it too much to be out of it. So
I
welcome
missed
back,
you.
Mike.
I missed you, Justin, and I missed everyone. I missed
Yeah.
everyone in this building. So, it's my first time back in
Of
the
course, this is the first
office.
time to this building, so I
Yes.
had to give him a tour, which was nice. He's
Yeah.
visiting from Austin, so great to have him in the office and checking things out. But let's talk a little bit about what our plan is for these status updates. What we're trying to do is really, this is for subscribers to kind of give you a sense of some of our strategy, what we're thinking, and doing a post analysis on some of our stuff, so you get a more insight into our thinking. Because really, at the end of the day, this should be an educational tool. So we're going to cover that today. We're going to cover why we're using the power trend to get a little bit more aggressive. We're going to talk about why we reduced our chip exposure, and a little bit about Dell, the downside reversal that we saw there, and also Toast, taking it off and putting it back on. So we're going to try and keep these fairly short. And at the end, we're hoping to get some customer feedback, maybe from our customer service department, to kind of do a little mailbag for you folks. So want to thank you, first of all, for joining us on this pilot episode. Sorry we started a little bit late on the live stream, but we're glad to have you all with us. So, Mike, do you want to give some opening comments?
Yeah, I think this weekly update that we're going to be doing every Tuesday, about an hour after the close, sometimes a little bit longer, depending on how things go. That I think it's really going to help everyone, subscribers as well as people who are thinking about subscribing, so you understand what it is we're doing, why it is we're doing it, because we send out a lot of alerts, because it's since I've been back, we've kind of changed things from the way we were doing SwingTrader into kind of a new way of doing it that's much more active. I think that a better name for it is really kind of an active trader product. So there are going to be kind of changes from just doing swing trading alone to sometimes we're going to be turning our profitable swing trades into position trades. We're going to act very quickly. This is not a day trading product, but sometimes we'll have to put something on and reduce it the same day if we need to do that for overall exposure or the stock's not working. And so we just thought, with all the movement that we're doing, that, just touching base with you guys every once a week was really going to help, and looking forward to the feedback and the questions you have. And we're going to address them every week, because we want this product to be very successful for you, both as the folks who just look at it as for ideas, and the people that like to follow along with every trade or anything in between. So it's going to be a fun ride, and I'm just excited to be here and doing it with you guys.
Mm-hmm. And at the end of the day, I think it's important to kind of say, look, you do not have to follow every single thing that we do. At the end of the day, this really is an educational tool. It should be used for generating ideas for you and really kind of helping you with your own style of trading. Because look, we are all different. Mike is a lot more active than I am, and I am probably more active than someone else. So we all kind of have our different styles, the way that we merge different things. I've got some leaderboard stocks on that I've had for a while, and I've got some swing trader stocks on. So it's really kind of that merger of what works for you. So let's get right into the market, because again, Mike, you started, I don't know why you decided to do this. You decided to start when I was on vacation, so you could really just kind of do what you wanted without my without me there. But you started at the end of March, and we had this really strong run since the November 1st follow through day. And then we were starting to get into a little bit of a sideways action here, but that didn't look bad. There was
No.
nothing bad about that at all. Very normal action. So talk a little bit about why you were ramping up exposure pretty quickly, and let's talk about this April 4th day.
Yeah, so why don't you do a change date there, over
To April
to
4th, or
yeah, to April 4th. That's fine.
Mhm.
And so just kind of a little bit of a background about me for those of you who don't know. So I, ran money for Bill O'Neill for a long time, the founder of IBD. But more importantly, as it relates to this product, is I ran um, an institutional version of something like this with Bill for a decade and a half, and we managed the list, and it was for an institutional client base. So those were more mutual funds and hedge funds who would hold things for long periods of time. So it was a different approach than the swing trading faster approach, but I managed it with him, and and we were making changes on a daily basis, and certainly every weekend we would talk. And one of the things that I learned from him was that when you're out of phase, you need to adjust as quickly as possible. So when I came on board, I looked at the exposure level and I just said, you know what, this is just too light for the trend that we have. And so the way he taught me is, when you know that this something is out of line, you just change it as quickly as possible. So I ramped up exposure as soon as I got here, and did it mostly with relatively conservative things, and try to do some ETFs, and then of course as soon as we got full in, then the market came down. And so again, as he taught us, and is there's the quick and the dead in the market, so you had to adjust. And so when the market got hit, we had to yank a bunch of stuff off. And in the market, you just have to realize that that is going to happen all the time. You're going to buy a stock or buy an ETF, and it's not going to work out. And you don't want to sit around and hope that it's going to come back because you're afraid to sell because maybe it bounces right back. That happens. So we just adjusted. Now let's go forward a little bit.
And you know what, I do want to mention real quickly, like,
Yeah.
Just let's go to the day before, because it looked like we were getting support right there at this green line, which is our 21-day exponential average, which the NASDAQ composite had been holding this entire time. So it just looked like another test of that. So it was very, very telling when we got that big outside day, downside reversal. But yeah, as we go forward, and I'm gonna forward over here to April 11th. Now, this was a day we had really kind of come inside this area right here, stayed inside this big wide spread. So it was kind of nice to see that, right?
That looks beautiful. And so when you're looking at the market, you really want to be intellectually honest. And we know what happened after this. But when you look at this, you have to pretend. And this is something that you should do for your individual stocks, for the market, is use the change date and go back and look at it. Stocks that worked for you and stocks that didn't work out, and just go, okay, given that same chart, what would you do? And you know what I would do? I would gun it, and I would gun it hard, because you know what? We found support at the 50-day. You had that terrible downside reversal that you had pointed out, and now you were able to recover. And then look, it just looked like this nice normal type of action. You're always asking yourself, what's normal, what's abnormal, and you look right there. You've got to gun it. If you don't gun it there, when are you going to gun it? You know, after it's all the way into full new highs. That was new highs on a, essentially on a closing basis. So you have to gun it. And that's what we did. We ramped our exposure back up. But let's fast forward. And the reality is the market isn't always kind. And there you had an expectation breaker. Then you broke the 50-day. And now there was a complete game changer at that point, because Justin and I did a bunch of research on times where it looked like this, and we've talked about that on the SMT videos that I do on Fridays with Ali. You should all watch those, and watch them every week. And we explained the research that Justin and I were doing, and frankly, when something like this happens, you typically either go down a lot further or you chop around a lot for a long period of time. So the odds were stacked against us. So I mean, that looks brutal. You know what happened now. You know that we bounced back, but when you look at that, again, intellectual honesty is the key to learning from the market. So that is telling you you need to be defensive, and we were defensive, but we'll always take things one day at a time. And that's what Bill O'Neill taught us, is to be, bend like a tree in the wind. And, I like to refer to that as just being Gumby. You have to be flexible. All right. So let's move forward.
And just as a reminder, we did really ramp down our exposure because we had to, right? I mean,
Yeah.
that looked bad, and I mean, you just can't sit there waiting for the next shoe to drop. So we definitely had very light exposure. Started kind of coming up a little bit, but look, we had the 50-day moving average line as potential resistance and that 16,000 level. So once it kind of hit that, there really wasn't much reason to be too heavy at that point, right?
Yeah, so we had a follow through day in spirit there, but then you right away you undercut it and closed below it, which is a negative sign. So now at that point we were stuck underneath 16,000. We were stuck underneath the 50-day, and it was really the odds were kind of stacked, still stacked against us. I mean, that is an area where a lot of people would want to short. Historically, that is a place where it could roll, but you always want to be positioned both ways and be ready in case the market changed, and the market did change, which we'll
Yeah.
see in a
Well,
second here.
and I do want to point out again, remember that after a bad break like this, slicing through the 10-week moving average line, it's not unusual to have kind of a bounce and then like another leg down. So we did have to be very cautious there, because again, we did a lot of research. We could see a lot of it, historical examples that looked like that, where it came up a little bit, um, started looking like it was going to recover, and then took another leg down. So we really didn't have much of an edge going into that. But as you said, Mike, things changed dramatically on May 3rd.
Yeah, so we've all seen, and you always, this is an example I stole from Justin. He would always talk about blackjack and going with odds, and that's what we would do. Is like you've seen someone in Vegas who's drunk and he's got 18 or he or she has 18, and they hit and then they get 21. Well, that's not a wise thing to do, right? But sometimes you get lucky. So anyone who is really buying, deep down at the bottom there, essentially you got lucky because we should have rolled, but there's a time when you have to realize that the market has changed, and this was the day that it had changed. You got back above 16,000. You had another follow through day in spirit, meaning you didn't have the volume, but you had the price action, and it was telling you that okay, this big bad correction that we were set up to have did not happen. So we had to quickly change, and we ramped up exposure. Day after day we were just increasing our exposure because the market was giving us that feedback. We weren't getting a lot of traction in the market, but that doesn't mean that you don't still adjust to what the market was doing. Now at this point we were looking and saying, okay, we're starting to trend above our 21-day, which is a green line, which is a very important element within the IBD methodology, but specifically for swing trading and active trading. When you're above that 21-day, in general, you're aggressive. When you're below it, especially if your high is below it, then you want to be defensive. So we ramped it up through there. So I know we're going over the market quite a bit during this session, but we wanted to explain to people like, why was it we were doing what we were doing? And frankly, you always do a post analysis and you go back and study what you did right and what you did wrong. And frankly, I'd pretty much do the same thing again. I mean, there would be little minor changes, but really how we handled this is how you should have handled it. Is when you're getting hit, you contract. When you're expanding and getting back above your 21-day, you're expanding your exposure, increasing your exposure. And that's what we've done.
Yeah, and so let's go ahead and go forward a little bit more, and we'll just kind of bring it back to
Yeah, let's
where
just
we're
go
at.
to today.
I mean, we really kind of had this nice little pause right here, and then I mean, at this point now we're getting into a closing high on this day, the 14th, and then an all-time high on the 15th. Of course, this the CPI data came out last Wednesday.
Yeah, I
I
think
think
so.
so. Yeah.
Yeah,
And then,
I think
you know, and just to be clear, we were talking about the follow through day, these follow through days in spirit. You got one on the 26th of April. This one, yeah, it was an inside day, kind of out of
yeah,
position.
yeah.
This day was critical, May 3rd.
That was
And
the
then,
real day. That was
yeah,
the
and
real
then
day.
May 6th was a nice follow up to May 3rd. So now at this point, we're also looking at the fact that look at this 21-day moving average line above our 50-day line. We've got some research that we've done for Market School that we call the power trend. We've done a lot on that. For those of you that watch IBD Live, we've covered that pretty good. Mike's been covering that with
Justin,
Ali on the SMT.
who should watch IBD Live?
Well, I mean, it's really kind of a quick plug on IBD Live. It's really great to have kind of that sense of what's happening, how we're handling things at the beginning of the market, and everyone really. I mean,
Yes,
because there
everyone.
are beginners that are on there. There are people that have been doing this for decades that are on there because you never know when a good idea can come about from someone else, or sometimes it's just hearing the rules over and over again, and we all need that sometimes. So yeah, IBD Live is for everyone, absolutely. So
Yeah.
now here we are,
But
the end of the week.
I do want to point out on the here we had ramped up our exposure ahead of this,
Yes.
going into new highs, which was very it took guts, really, just being honest after getting chopped up. But what one of my favorite shows is Ted Lasso. It's on Apple TV, and one of the things that he says is, "Be a goldfish. You have a short-term memory," and that was a lot of what Bill had taught us. Is that it doesn't matter what you did yesterday. It doesn't matter what you said yesterday. And I would talk to him for an hour and a half, 2 hours every Sunday for a decade and a half. And sometimes on that Sunday night, he would be so bearish that the world was coming to an end. But by Wednesday of that same week, he was more bullish than he was bearish. And that's what, Justin saw it in real time too. He saw what Bill was doing every day for all of that time. He saw, all of the portfolio managers, what we were doing, and saw those changes. And that's what you have to do. Sometimes, it takes guts to, step up and do, forget what you had just done and just live in the moment. And that's what we do, just following the footsteps of the master. And so now we ramped up our exposure, trying to get some foot, get our feet into some stocks that we think are going to have some nice advances. And then why don't you take it from there, Justin?
Yeah, and just one thing on the Bill thing, I will say that he didn't care about his reputation, because there were times where he would send letters to clients about how bearish he was, but if the market changed, he's like,
Yep.
I don't care that I said that a week ago. He was like, I've got to do what's right and change with the market. So okay, this was the day that we had the power trend. This was Monday, and then of course here we are today. Things still looking great. Let's get into some trades.
Yep.
And I think first of all, we got to discuss how we were looking at a lot of chips. We can bring up Broadcom. That was one that we had on. We had on Nvidia. We took that off today. We had a position in SMH. So at one point, we had a 25% exposure to the chip sector on May 13th. So now we have zero. Why is that, Mike?
Yeah, so we're going into, you got to remember this is a swing trading, active trading product. And so what that means is you want to have very tight stops, meaning, how it translates is our maximum loss is 4%. That's our goal. Now, sometimes it might get, we might get a gap down, it might get, away from us with an intraday, big spike down, but our goal is to not have any losses that are more than 4%. So that means you have to trade differently than if you were position trading where your loss could be 7 or 8%, or if you dial back your position size, you could have it even more of a loss. But that's not this product, and that's not what this is for. So given that we're going into Nvidia's earnings tomorrow after the close, that's going to have a big move. I think frankly, it could be up 5-10%, down 5-10%. I don't think I'm alone in thinking that as far as, for Nvidia. And I think Nvidia is one of the best stocks in the database right now. I still have a small position in my personal accounts
I have a
with
position
it.
as well. Mhm.
And but for this product, what we didn't want to do is be in a position where come Thursday morning we have a gap down on let's say some negative reaction to the earnings that have to remove Nvidia, SMH, Avago, any other chips, only to have an upside reversal and then have to put it right back on. So what we did is we're being preemptive and saying we don't have enough cushion going into the earnings release. We wanted to just remove all of our direct exposure to chips. Now, of course, we have AI-related software plays that are going to move with it, and we have ETFs that are going to move with it, but nothing directly tied to chips. And that's what you have to do from a swing trading standpoint, because it's just too much risk going into that event. It's just a crapshoot, frankly. And so if we were up a bunch for the year, we might have taken a shot, but since we're not in that position, you've got to trade the chips that you have in front of you. When you're short stacked, you trade differently than when you have almost all the chips. And you'll see that, and we're going to be talking about that every week of how we're playing differently based on how many chips we have currently.
Yeah, and I'm just going to real quick, and gosh, I got to apologize to our producer and editor that I didn't give her forewarning on this, but I switched to another chart here, and this just kind of shows where we're at right now. So we do have 23% exposure to software. That's kind of our big bet right now. That includes security software. It includes some other stuff. The ETFs, we do have some general ETFs. We have some specific ETFs, and we got some retail. So it's pretty spread out right now. So that's by design, right?
It's completely by design. This is not by accident. We go through and we methodically, and I just want to make sure that everyone knows the full team. So it's Justin and I and Dominic Gessel and Chris Gessel. That's the SwingTrader team. And when we do this, we look through and we're saying, okay, what risk events do we have in front of us? Okay, we've got a chip risk event with the Nvidia earnings, so we want to reduce those. But because we've got the power trend, we wanted to stay as close to fully invested or slightly on margin, just because that is the appropriate thing to do based on what the market is doing. But we wanted to do that in a broad-based way. Now, of course, if Nvidia falls 20%, it's going to bring everything down with it pretty much. So, you're not really safe with anything. But with this, we wanted to be kind of spread out. And why I do like having the ETFs in there as far as having some broad-based exposure. And maybe now's the time to talk about the fact that we're currently using single ETFs, and we might go into the doubles or
Right.
triples.
Yeah.
And so going forward, we might remove some of by what I mean by doubles or triples is like, let's say you've got the Qs or a single, a QLD is a double, and a TQQ is the triple. So what we might do is start removing some of the singles and end up putting some doubles on. And if we get traction there, then we might eventually remove those and put triples on. We will see. We take it one day at a time, but I didn't want anyone to be caught off guard if you see us remove like a QQQ. It might just be because we're looking for a better opportunity to get into a double exposure there, because a lot of what we're doing is all around how deep in the market we are. So this is something that you see at the top of the SwingTrader. For anyone who takes the SwingTrader product, we have in there what, at the end of the day, Justin will put, a little blurb about the market, but most importantly in there is how deep in the market we are. And so you want to look at that and learn from that. And that is our interpretation of the market. Are we going to be right all the time? No, of course not. Is everyone right? Is anyone right all the time? No, of course not. But that is our assessment. And so by doing that, let's say you're 100% invested and you've got a big QQQ and spider position. Well, that's eating up a lot of your buying power. So if you remove those and then put it a double or a triple in, it frees up some buying power to buy some other stocks, individual stocks, with having the same exposure level. So those are some of the things we're going to be talking about each week, so you get an idea of how it is to manage a portfolio this way. So again, don't get hung up on the little things that we're saying. Take it more of what are we trying to do? We're trying to bend like a tree in the wind. We're trying to go with what the market is telling us. The feedback right now is we're starting this power trend. If you don't know what a power trend is, we have some good videos on that that you can find on our YouTube site as well as on investors.com. There's some stories on it, but essentially it means your low is above your 21-day for a period of time, and your 21-day moving average is above your 50-day for a period of time. And that is what just happened. And it happens at the beginning of very large, long moves. Does it mean that it's going to happen every time? No, of course not. But it could happen. So we're setting ourselves up. We're being aggressive here, but we're going to be flexible. If we get a big hit in the market, we're going to contract rapidly. But if we get a nice pop up higher, or we continue trending higher, just nicely trending higher, you're going to see our exposure ramping, and you're going to see that we're going to start trading more aggressive individual stocks.
Mm-hmm. And one other thing on the ETF with using the leverage. Look, it's not for everybody, but I personally like to do it because I have cash accounts that I'm trading, right? Retirement accounts, and you can't go on margin. So just as Mike said, I don't necessarily want to eat up some of my buying power if I want to use those ETFs. So it's nice to have that kind of in your back pocket to still get the exposure ramped up a little bit, but also know that you can kind of have some room to buy individual stocks if necessary. Let's go ahead and go to Dell real quick, because I want to talk real quick about how this one was working out really nicely for us. And we took it off yesterday because of this downside reversal. What were some of the reasons behind that, Mike?
Okay, do a change date to yesterday if you don't mind. And so this is something you should always do whenever we, put something on, take it off. If you want to study, is look on that day. So what does this tell you? You've got a downside reversal. Downside reversal is just, you go up, you hit new highs, and then for relatively new highs sometimes. This was fresh new highs, and then you come off of that. And they come in all shapes and sizes. This is kind of a medium-sized downside reversal, meaning that, the spread, the distance between the high and the low was big, but it wasn't huge. And it was an outside day, meaning your high was above the high from the prior day and your low was above the low from the day before. And so that signals that typically you end up seeing further weakness. 1, 2, 3 days. It doesn't mean when you have a downside reversal that the stock is done. It just means it's typically going to rest. And so we were going into this risk event with Nvidia. We saw this downside reversal on there, and we said, okay, the likelihood is this is going to be dead money for 2, 3 days, maybe longer. Why don't we take that capital off and put it elsewhere, lock in that profit, and move it into fresh names that we might be able to get a gain from? And that's what we did, and that's how you swing trade. Now, if you're in this, and let's say you rode along with us and you bought Dell when we put it on, then what you could do is just say, you know what, it's a downside reversal. I like Dell. I want exposure here. I'm going to hold my shares, and I'm willing to let it come into the 21-day, which is that green line. There's nothing wrong with that. Feel free to do that. You don't have to sell something just because we've removed it, but think through, why did we remove it? If it was a horrible down day, then yeah, you should have. But this was a mild-mannered downside reversal that basically means it was should have paused. Now let's go back to what it did do today. So this had a mild, tiny upside reversal. So what it probably tells me is this one wants to kind of shelf out, just kind of go sideways for a little bit, or probably it's just also waiting for um, the news from Nvidia, because it's all kind of in that same
Right.
AI space. And so, if Nvidia goes up, this is probably going to go up, and vice versa if it goes down. So look, that's kind of how we approach things. Sometimes we're going to just take quick profits. Other times we are going to, give things more room. Do not be surprised if you see us hold things for, instead of days, weeks, even months. And that is the goal with some of these stocks. And we'll talk about it in future Tuesday broadcasts about how we use the relative strength line for that. Not today, but that's something to look forward to in the future.
And just as a reminder, this is where we put Dell on the May 6th. So we did have a nice cushion on it. So again, this is where you do have that possibility of kind of making the trade your own. But we did have that earnings coming up, not just for Nvidia, but Dell's earnings are just 9 days away. So definitely something we had to consider. Mike, let's talk a little bit about Toast. So I'm going to go ahead and go back to May 8th. This is when we put Toast on initially. And this was yeah, a big move. And this is something that we discussed at the time, that 50% retracement. Talk a little bit about that.
Yeah, so the 50% retracement is a big part of what I do. And if any of you have watched the SMT videos that I do with Ali on Friday or tune into IBD Live, you hear me say it all the time. And it's something that I really picked up. It's more from the way Jesse Livermore kind of looked at things. It's kind of my own twist on it, where basically you go 2 steps forward, 1 step back, and that's normal. And that's on an uptrend. And so, meaning if you move up, and you can do this on an intraday basis, daily, weekly, monthly, doesn't matter. It all works out. That if you move up, let's say 10 points, then you can expect it to come down 5 points or 5%, move up to 10%, 5% pullback without the trend being broken. And so just keep that in mind with lots of things that we're doing is using this 50% retracement to give us a guide. So on that one, what we were doing on an intraday basis is just looking at that 50% retracement and then putting it on when it was right around there, because we can't put things on right before earnings. We tend to not put things on if the earnings are going to be within 10 days or so. And so we gave it, we let the earnings come out and then put it on, and then we decided to take some profits. Why don't you show them where we took some profits?
Yeah, this is on May 16th is where we took a quarter off. Now, Toast, I mean, it wasn't really doing anything wrong. We were up on it. It was still moving up, but it was a little begrudging, wouldn't you say?
Well, it was, yeah, I like the way you put that. I also look at this as wedging.
Hmm.
And what a wedge is when you don't undercut the lows of the prior day. So a lot of people, and we do this on SwingTrader as well, is we'll put our stops at the low from the day before, or the day before that, or the day before that. That's standard operating procedure for a lot of shorter term traders. And so when it's not taking that out, you have a lot of people who haven't been tested. And so that's what's called a wedge. There was one way to define a wedge is when you're not shaking out. So as it was inching up there, we just said, you know what, this looks like it's probably should pull back and correct. And again, that's another part of that 50% retracement where you're looking at that and saying, okay, it's made its move up. It can retrace at least 50% of that, and that would be normal. So you know what, let's lock in those profits and then go ahead and move on to
Well, and we
another
only took a
stock.
quarter. We only took a quarter on this day. And part of that was because we weren't quite ready to go on margin yet. It was like,
That's
okay,
right.
we still had to kind of, and this is
That's
something
right.
I put in the market action. Like, okay, we need to earn that that right to go to margin. Hadn't quite gotten there yet. And
Yep.
the next day we ended up removing the rest because it's
Yep.
like, okay, and it was kind of nice that we had removed the quarter, previously, so we didn't take as hard of a hit. But yeah, we were also trying to make room for other things so that we weren't going on margin.
And
Now,
that was normal at that point because that
mhm,
resolved the issue. And then
right.
so we were looking at it saying, okay, we
So it's
like
no longer a wedge, right? Because you got
it's
the shakeout.
yep. And we were just saying, how can we get back in this?
And here we are today. We got back in. What were you seeing here, Mike?
Yeah, so we were coming back into a logical area where you about 50% of the stocks will pull back into their pivot area. Standard pivot on this is you can see it with the pattern rec, the 2563. So it came back into that area, and it also coincided with the 21 day. So it came in there and we're saying, look, this is where it should stop and move higher. We had the 21 day as a line in the sand, and we were treating this as an upside reversal. So the opposite of what we were doing with Dell. When Dell had the downside reversal, we were removing it. My favorite entry is an upside reversal is something like this, because this should move higher from here. If it doesn't, and it takes out today's low, we know that we're wrong, and then we're just going to have to um, back away.
Mhm.
So that's what you expect with an upside reversal. You expect it to go higher. Downside reversal, you expect it to go lower.
Yeah. And look, we know that it was down 1.6% today. If you just looked at that number being down 1.6, you might say, why would you add something that's down? Well, if you consider how far down it was and where it ended, that close really makes it look very different. So that kind of wraps it up for our charts that we're going to cover today. Just a few other things that we want to mention. Again, Mike went over to the customer service area today and he kind of asked, hey, what kind of things do you guys hear? And I know that for subscribers, one of the things that a lot of people have questions on is the alerts. Like, how quickly do those come out? We have three types of different alerts. Look, if you're getting the email alert, that's one of them. That's going to depend on how quickly your email server, refreshes. It's going to, depend on a few other things. The other types of alerts you might get are a desktop notification or a push notification if you have the SwingTrader app on your phone. So both of those I would say are a little bit quicker. But remember, if you have Focus Assist on, or you've got your notifications muted, or let's say you one time canceled the notifications, you said, I don't want notifications anymore. You're going to have to go back in and turn those on. So those are some things that might happen. And if you're not getting emails as a subscriber to the SwingTrader alerts, you might be on our do not email list. So do check that out. We can't communicate with you legally on those unless you say, hey, it's okay for you to send us communication. So that might be an issue. Was there? Also another thing that we should just mention, a lot of people have been asking, like, oh, you're doing all of these different position sizes. We just met with a one of our product team members. He is actively working on something. We're trying to see what incremental improvements we can do to help our customers. And one was, hey, can you put the position size on our current trades sheet? And so that's something that we're working on actively right now. So hopefully we'll get on that and you'll see, oh, this is a half position right now. This is a quarter position, and so on. Anything else that you want to say in terms of feedback?
Well, as far as the position sizing, I think that's a very important topic to just briefly go over. So before we were doing 12% positions as a full, and then, back in the day, we were taking things off a third at a time and kind of had this strategy of when things were moving up, we'd take a third off, kind of raise our stops. I like that strategy. We're just doing a little bit different strategy right now for this. Is, again, I said it was active trader. So for now, what we're doing is lots of our positions are either going to be a quarter or a half position to start. And a full position is 10%. So half of that is 5%, quarter is 2.5, 3/4 is 7.5. So make sure that you note that. And in a perfect world, in the morning, we put on something as a quarter position. And then late in the day, when we see how it's acting, we'll decide to increase that to a half, 3/4, or full, depending on how deep in the market we are, how we're doing, what exposure we have to that group, all sorts of things. And so just look for that. Really pay attention to, if you're really busy, lots of our activity in general is going to be at the end of the day and the beginning of the day. The stuff in the middle of the day, we know that you guys are all busy, whether you got taking care of kids, you're at work, you're out and about, you're driving somewhere, and we're cognizant of that. But we do have to work in real time. But we're trying to focus most of the activity early and at the end of the day to kind of help you guys out. But we will have to do things whenever the market warrants it. But again, so look at those position sizes on there. We're trying to make it easier. We're going to put it on the left side of the chart. If it all works out, we got to look at the how the programmers draw it up. But basically, the first thing you'll see is what position size, either a quarter, half, 3/4, or full.
Yeah, great stuff. I think we can wrap here. Just one other thing I wanted to mention, because a lot of folks ask about performance and stuff. Again, don't be too focused on the performance side. Really, it's about the ideas and how those are working out for you. But I will say that keep in mind, performance does not generally go linear. So you have those times where you have to really take advantage of the market when it's working for you, and then you have those times where you really back off because you're trying to protect your capital. 2022, great example of us trying to protect capital. 2020, great example of us really kind of going pedal to the metal and really trying to gun our performance. And we're kind of at the beginning stage of that right now. So that's why you're seeing us go slightly on margin and getting a little bit more aggressive, because we could, one of those times could be unfolding. Now, look, it doesn't mean that it's absolutely going to happen. We've got Nvidia earnings. We've got a wall of worry of all sorts of geopolitical events that could derail things, but we've got to kind of go off of what information we have right now, what odds are in our favor. And right now, it's looking like this is the time that you want to be more aggressive. So any final thoughts?
Yeah. So just on that performance thing, in general, what people should expect is when we're trending above our 21 day, that's when we're going to be gunning it. And that's when we're going to be looking for outperformance. When we're underneath the 21 day, we're going to be just preserving capital, being relatively light in. We're always going to stay loose. We don't want to freeze up and be afraid to put on trades, but we're going to be cognizant. And by the 21 day, I mean on the Nasdaq and the S&P 500 primarily. But when we're going back and forth, like we saw here recently, that's when you're going to get chopped up. That just comes with the territory. So just said, I want everyone to have clear expectations. When we're trending above, we're trying to, give you as much alpha as possible. And that's what we're trying to do right now, getting in that position, getting, kind of broad based out there. But if for some reason we just fall apart, we are going to contract just like a turtle and go back into our shell, and then wait to go back up. And just I want to thank everyone for tuning in, and I just want to thank Justin for all the hard work that he does with this. It's just you have no idea how much hard work he's put into this, and it's just amazing to get to work with him. I call him the saint for a reason, because he is. And then it's just been so nice working with Dominic and Chris again. Just wonderful to be back, and tune in every week, please, and tune in to IBD Live. Who should watch IBD Live?
I think I know the answer to this one. Is it everyone?
Yes, and
Yes.
who should watch the SMT video, especially on Fridays?
Yeah. That would be everyone too.
That
I
would
think.
be everyone. Okay, I
Right.
think we're
Yeah,
done for
yeah,
today.
yeah. And also, I think we need to give some thanks to Allie for making this happen. She has a lot of stuff going on, and she walked us through this to make it happen. And of course, Lily, who's always in the background. You can check
We
her out.
we wanted to have Allie actually come on and you know bless this because she is everything. She's the queen of. We're gonna just call her the queen of video. That's gonna be her nickname, because she does such a tremendous job, and with her team, with Lily and everyone else on the team, they were tirelessly working to get everything out. So thank them. It really takes a village. So thank you,
and in
queen
that
of all
regard
things.
in that regard, it takes a village. So hey, we do depend on your feedback. So if you want to use those YouTube comments to kind of make some notes and send those on our way, next week we'll try to get to a little mailbag from some of your comments.
Oh,
So
Allie wants to just pop on and wave and say
nah.
hi. Yes, she does.
Hey,
Okay,
we've got
I tried.
we've got to get on the road. We've got traffic to contend with.
We
So
got Pearl Jam to go to, bud.
yes, Mike and I are going to a Pearl Jam concert tonight. So yeah, it was over 30 years ago that I went to my last Pearl Jam concert. So excited about that. Thank you all for joining us. We will see you next week.